Geopolitical tensions in the Middle East saw a sudden de-escalation over the weekend with the signing of a Memorandum of Understanding between the United States and Iran. The agreement extends their ceasefire by 60 days and immediately reopens the Strait of Hormuz, removing the U.S. naval blockade on Iranian ports and allowing tankers to resume shipping. This agreement triggered an immediate sell-off in energy markets, sending Brent crude oil tumbling below the $90 level. The drop confirms a long-term technical head and shoulders, or double top structure, with chartists pointing to $70 as the next target for short positions. With inflation worries easing alongside oil prices, U.S. equity markets staged a sharp V-shaped reversal. The S&P 500 gained 1.65%, while the Nasdaq Composite surged over 3%, jumping back above its 10-day, 20-day, and 50-day moving averages in a single session. Within tech, AppLovin's ad tech model is drawing attention. The company's Max mediation layer now handles 60% of mobile gaming ad options, feeding user data back to train its Axon 2.0 engine to create an informational advantage in ad placement. For AI hardware, supplier AXT plans to double its indium phosphide production capacity this year and next. However, these plans depend on export permits, since China added the substrate material to its export control list back in February 2025. Cloud provider CoreWeave is expanding aggressively, but carrying nearly $30 billion in debt and lease commitments. While the company relies on a 6-year depreciation schedule for its GPUs, critics worry hardware obsolescence is faster, even as senior executives sell shares at high rates. Microsoft's capital expenditures have reached $190 billion for the calendar year, depressing its free cash flow. While the company's backlog stands at $392 billion, 45% of those commitments are linked directly to OpenAI, highlighting customer concentration risk. Regulatory pressure is also affecting private competitors. The U.S. government issued a directive requiring Anthropic to cut off foreign national access to its newly released Fable 5 models, citing a narrow jailbreak risk that could expose software security flaws. Market liquidity is facing structural shifts from a wave of stock issuance. Roughly $1.5 trillion in fresh equity is expected to hit U.S. exchanges over the next 2 years, with year-to-date IPO plans already totaling $120 billion across 160 companies. That supply wave includes SpaceX. On its second day of public trading, the stock jumped 19.6%, despite a high valuation. The move was supported by a low free float of just over 4% and anticipation of index buying from fast-track inclusion rules. Looking ahead, global liquidity faces a test from Japan. The Bank of Japan meets Tuesday, with markets expecting a rate hike of 20 basis points to 1%. This represents a level not seen in decades and threatens to trigger unwinding in the yen carry trade. On Wednesday, the focus shifts to the U.S. Federal Reserve. Under new Chair Kevin Warsh, the central bank might reduce the use of its forward guidance and dot cots, leaving investors preparing for a potentially hawkish message on policy rates. In this environment, asset manager PIMCO suggests constructing portfolios around a theme of rupture and resilience. We will monitor weekly jobless claims as they approach recession warning levels, alongside the gap between nominal and real GDP growth.